The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. This is Deb, and today is Thursday, April 10th, and it's supposed to be a glorious day, so hopefully everyone will have an extra little skip in their walk today, just knowing that hopefully the long, cold winter is over, as well as ending the enrollment period. So without further delay, let's get into today's agenda. As always, please type in your questions or raise your hand if you want to ask live, and we'll try to answer all of the questions that we can. Today, we're just going to do a little bit of a review because there's not a lot of new information that we have. As far as the extensions of the non-PPACA individual and group health plans, you know, the extension of if you like your plan, you can keep your plan. It appears that every carrier is trying to formulate some sort of idea and direction on what that really means. But at this point, we've only heard from one carrier on the individual side and not in writing as to how they're going to extend their plans, and that's Capital, and it appears that they're going to offer some sort of extension of non-PPACA plans. Again, the exact details I don't have in writing, so I'm a little hesitant to even share those, but what I was told is that for Capital Blue Cross individual plans, they're going to allow those individual plans to stay on the books till sometime in 2017. The group is still up for grabs. No decision has been made. Same with Highmark Blue Shield for individual and group, Blue Cross of Northeastern PA, Geisinger. I mean, bottom line is I know nothing yet. I have nothing from the carriers other than I'm in contact with them, and I keep getting the feedback that they're going to be coming to a decision soon. So as soon as I have it, obviously, I will send that out to everyone, and we could talk about it, hopefully on next week's webinar. But at this point, I don't have any information on that. As far as the on-exchange enrollment extension, you still have another several days until 4/15. You can apply on the FFM. And there are several. Last week I talked about a box, which is what was, you know, really been talked about in the news, that there's a box that they check if they qualify for a special election. And essentially, there's no box. There's just a series of questions regarding qualifying events. And I don't know if anybody has gone out to healthcare.gov, and I'm going to do that just so you can see what the process is, because you have to kind of get into it a bit differently now, and hopefully it'll be up and running. You can see it's kind of changed all the way around, but if you have a client that you want to enroll by 4/15, then you click this button here, see if you can still get enrollment. Down towards the middle, there's an Apply Now button. It talks about qualifying events there. You can do any of these hyperlinks for any specific special enrollment period. I find it easiest just to go to, you know, choose your state. You can hit Apply, and then this takes you into the Create Account information. And you can see at the bottom, you can create an account from this page, or you can say, I already have an account, and then you can go into the normal sort of enrollment that we've experienced over the last 6 months. So it's still out there. Pardon me. It's still out there for making application until the 15th of April. So if you do have those late clients or last-minute clients, get them in, because you can still do that. As far as a qualifying event after the 15th, unless another extension is announced, and I don't have anything indicating that it will or won't be, but for a qualifying event, once the open enrollment has ended officially, the person has within 60 days of a qualifying event, before or after that qualifying event, to make application either on or off exchange. Now, there are some strange things that are happening with the qualifying events and how the FFM system interprets that. So, you know, it's going to be a work in process or in progress, because this is a process that they've not really, the FFM has really not experienced. So I imagine it's going to be more coding issues and working through the kinks. So we'll be as patient as we can, and you guys can be as patient as you can, and together, hopefully, as we did with the initial enrollment, we'll figure it out together and hopefully prosper. As far as off-exchange enrollment, this is, again, a review and a bit of an update from last week. You can still apply off-exchange up until 4/15 for Highmark Central, Highmark Western, Cap Blue Cross, and NEPA if you can prove that the BC NEPA site was down. Aetna you can do up until, well, actually you can do until the 15th, but after the 7th, when a paper app is received, they are going to ask for documentation of the qualifying event in which they were unable to apply by the 31st. So that one's kind of like, if after the 7th, which is come and gone, Aetna is probably going to be pretty tough to get an application through off exchange. And then 3/31 was definitely the close for IBX, UPMC, and Geisinger. Health America, I'm still unclear. We're no longer a general agency. They no longer work with general agencies, so I'm not sure that I'm going to get that answer, but at this point, I'm unclear of it. Just a couple things I wanted to touch on. You know, with all of these enrollment extensions, there's also, quite frankly, a workaround. Since the exchange, the FFM is open until 4/15, if you have a client for any of these plans, IBX, UPMC, Geisinger, CAP, NEPA, or you know, any of the plans, specifically NEPA, Geisinger, the ones that aren't offering extension, a workaround would be going to the FFM, making application, because there is a point in the FFM application process in which you and your client can choose to see if they can qualify for lower rates. You don't have to do that. You can choose, no, I don't want to see if I qualify for lower rates. So essentially, you're accomplishing the same thing, getting that person to the insurance carrier by 4/15 for a 5/1 effective date with no subsidy. I've not done one of those enrollments, so I'm not sure if the same level of income information is going to be asked, but if any of you do that, take that route, just shoot me an email or give me a call and let me know what you experienced. Another thing is, you know, issues to watch out for. I just heard last night from one of my agent partners that, excuse me, I think I'm losing my mind here. There we go. Sorry, folks. One of my agent partners notified me last night that she had a person, her client that she helped enroll in the FFM, was well within the subsidy guidelines. She was at 138% of the FPL and made application, received the premium subsidy and the cost-sharing subsidy, but they also received a Medicaid access card. Now, this is the second time I've heard of this. The first time I thought it was just an anomaly. The second time now I'm wondering what's going on. I do want some information. If any of you have experienced that or your clients have called you and said they received an access card, if you can give me the details on that particular person, the date that they made application, any application ID they may have through the FFM, the carrier, preferably their income, all of those pertinent details. I'm going to go to the Pennsylvania Insurance Department and find out why this is happening. Clearly, you can't, at least from my understanding, you can't qualify for Medicaid and a premium subsidy as well. So I want to kind of get to the bottom of this situation before it becomes a real problem. Another thing is And this is just par for the course. We all know that children 19 to age 26 within the PPACA law can stay on their parents' plan and make application under their parents' plan as a dependent, even if they're married, even if they file their own tax returns. However, the FFM system is not allowing that. That's been from day one. You know, that's been happening. They require these children to either apply on their own or roll off onto a different plan under the same FFM account, but a totally different plan with separately accumulating out-of-pocket maximums. So, you know, that's a glitch within the system that obviously they don't feel they want to rush into getting fixed, and that's where, you know, where the PPACA law and the system itself differs. Another situation is with the employer affordability factor for offering group health coverage. We've had people that have made application that are offered affordable group coverage, but the system itself seems to be behind what the safe harbors are, meaning that when they're asking the questions about the group coverage and the premium, they're really taking into consideration all of the premium, even if, you know, it's dependent premium, and the total family FPL. Well, that's incorrect. So you may have clients that go on to this FFM system that are offered coverage by their employer, and the employee portion of the premium that is passed on to the employee is zero, but they pay for their spouse's premiums. And, you know, the system, the FFM system, may allow that person to apply and receive a subsidy, but I can tell you now that is incorrect. That's not how the law is written, and I would just caution you to be a little bit wary of that situation. One of my agent partners actually called the health insurance marketplace and gave family details as far as income and what is being passed on to the employee, and they said, sure, go ahead and apply, they can get a subsidy, but it's wrong. So I want you guys to be aware of it, that yes, it can take place, but I would not be part of that, because it's not by law allowed. So those are my horror stories, I guess, and warnings for today. I did have some submitted questions, so I want to just go through those quickly. Sue asks, she said, are others frustrated with clients who for one reason or another do not fit into the system for subsidies, meaning that they make too much for Medicaid but not enough, they're not at 100% of the FPL to receive a subsidy. So she's saying, what are others doing to vent any frustrations that they have, besides drinking alcohol, of course? What do we do for small groups who went to individual coverage? Well, I guess it's a several-part question. So let's answer the first. For those people in our black hole that we all are aware of, you know, they make too much for Medicaid and not enough to receive a subsidy, there's really nothing that can be done, unfortunately. These are the people that are most in need of assistance and can't get it, either from Medicaid or from an advanced premium tax credit. The only concession given to them is that they can apply for a catastrophic plan. And that's not much of a concession, because the catastrophic plans are not as affordable as one would hope with the reduced coverage and the increased out-of-pocket. But unfortunately, that's the only concession that they can apply there, you know, on a catastrophic plan, even if they're over 30. And of course, you know, one of the safe harbors, the exemptions from the individual mandate, is that they wouldn't have to pay it. So I guess in theory, that's another concession. But so that's the first part of the question. The others are, what do we do for small groups who went to individual coverage, who then hire a new employee in the lockout period, and they weren't savvy enough to purchase health care because they knew they were job hunting? Does anyone have any ideas? And this is going to be coming up more and more. We all have experienced small groups, the employers dropping coverage and sending their insureds to the FFM for coverage. And in a lot of ways, that's certainly a benefit for everyone involved, but the real problem is after this open enrollment period, if an employer drops group coverage for individual coverage and they hire somebody without coverage, that's not a qualifying event for that individual being hired. That person can't obtain individual insurance on or off exchange after the enrollment period ends. The only option would be that hopefully they're coming from another employer, that they had COBRA options. Another option might be a short-term medical or a limited medical plan. It still wouldn't, eliminate the individual mandate tax that they would incur, but it is at least giving them, some sense of coverage or some sort of coverage. And other than that, again, it's all new territory for us, so there's not really a whole lot of options out there. So, when you are talking to your groups and heading to a new group, obviously individual insurance is very enticing, and it works in many, many, many circumstances, but there are some pitfalls to that as well, and you need to be aware of that, and your employer clients need to be aware of that as well. So Jim asks the question, and he ends it with saying, yes, this is a serious question, but his question is, on healthcare.gov, is anybody monitoring the applications that are submitted to be sure that the rules are being followed, allowing clients to apply or not to apply at this time? And he adds, does anybody care in Washington when the numbers mean so much? And unfortunately, Jim, the couple of examples that I just gave you, I don't know who's monitoring that. I don't know, other than when these people file their taxes, if there will be any repercussions. The IRS has already come out and said that, they're probably not going to heavily pursue any infractions. So I think overall the answer is no. Nobody's monitoring this to see if rules are being applied. If they were, then children could apply on their parents' plan, and people that have affordable group coverage wouldn't be able to get a subsidy. So, I guess the answer is unfortunately no. Nobody is monitoring that. And, again, I caution you so that you guys, all of you that are talking to your clients, you're aware of the rules, so that they don't come back on you and say, well, my agent partner or my agent didn't tell me that. So just be aware of the rules, because the system will allow something outside the law. And Janet says, what is the status on carriers extending group plans to 2016 per President Obama's permission? And again, we still are unclear. The carriers have not made the decisions and or shared those decisions with us yet. So hopefully soon. God knows we need to have some information soon, right? If not already. And Ash asks a question. He would like to know the rules concerning people enrolling under a special election period when losing employer coverage. He said that he had a horrible time this past Friday. They were on the phone with healthcare.gov until 11:30 in the evening. He said they spoke with 4 people, and all of them said different things. One person said you can't apply until the employer coverage ends, which makes no sense. And Ash, I would agree with you. Again, these special election periods, according to the FFM, are going to be a little dicey. I had one of my agent partners, they were losing, their client was losing group coverage effective May 7th, and he was told by the health insurance marketplace worker that they can't reapply until May 7th. Well, that's not correct. Again, the law says 60 days within the qualifying event. So again, I don't really have a definitive answer for you other than please keep me informed on what you're experiencing, and I can try to get to the bottom of all of it. I guess after enrollment ends, the FFM is going to appear a bit different, maybe than it even is appearing now. But, again, I don't know the answer to that. So that's it for the submitted questions. Let's just see if anybody has any questions that they'd like to answer. I don't see any hands raised, so these are all typed in questions. Mike says, a client wants new coverage after May 1st. What carriers and plans, if any, are available without a qualifying event? Actually, no carriers, Mike, are available. No traditional health carriers are available outside of the open enrollment period, both on and off exchange. The only options are short-term medical, limited medical plans. That's it. Mike says that if they say they have a qualifying event, must we submit or even see proof of the qualifying event, or do we take the client's word and signature on that form? Up until the 15th, there's really not much verification or proof that is provided, or needs to be provided to prove that they can enroll by the 15th. Each carrier has a special election period form that they're requiring. Now, whether they have to include proof, one carrier, I know NEPA, was asking for proof of a terminated group plan. So I think, the answer to that is it's going to vary by carrier, and it's going to be different after the 15th. But look for those special election forms on our website under the specific carrier, and again, it's all new, so we'll learn together, and if proof is being requested, then we'll certainly let you know. Lori says, what is the latest on groups wanting to apply on market? I assume, Lori, that you mean the shop, and the shop plans are available. It's just not available through an online FFM process. If you have a group that wants to look at shop coverage, then just let your case manager know that, and they can get you shop quotes. Justin says, for his understanding, health insurance applications must be done by April 15th on the exchange or off the exchange, and that's true for some carriers, Justin, yes. And an exception would be a qualifying event, correct. And when does next open enrollment occur? And the next enrollment is set to be, at this point, November 15th of 2014 through February 15th of 2015. And Justin says, has URL set up a program for non-certified PPACA agent brokers to have URL enroll the person on healthcare.gov while giving some credit to the agent broker for referring the individual? Absolutely, Justin. We've been doing what we are calling a soft rollout of our enrollment application services. So I will send you that information, Justin. But yes, if any of you just don't want to deal with this, or need some assistance, or just want to refer a client, we'll handle that for you. So if you want details on that, let me know. Give me a call. And Sean says, just an FYI, he submitted paperwork for a client to prove he was not in jail. He submitted it online, and the FFM admitted that submitting a PDF online will likely not be seen. Interesting. Thank you, Sean. That's probably what we expected. Even if they're asking for proof, them getting to see the proof is probably few and far between. Tracy says, I have put a company in last week for a start date of 6/1 because the company is dropping the group coverage, had no problems. If you put a client in now and get to the eligibility, it will not give you the tax credit until you proceed to the enrollment. Yes, I do know that. Hopefully all of you do as well. That format of when you see the subsidy determination is a bit different. And Mario says, please send that to us as well, Deb, referring an individual. Okay, I will do that, Mario. I'll get that to you as well. Looks like those are all the questions for today. I just want to let you know, too, if any last-minute questions come in, I still have the question box up, so I'll see that come in. But while I'm waiting, as we move forward on our weekly webinars, again, if there's still a need to do these, we'll continue to do them for as long as there's a need. what I want to do moving forward, and I've already talked to a few people about this, is kind of bring in like a 5-minute guest speaker. The first one I'd like to bring in is somebody that we have an agent partner that is a health agent and also a tax preparer, tax accountant. So I wanted her to talk a little bit about the advanced premium tax credit and what that really means when a person files their taxes, because again, it's still kind of unknown what it does to your overall income and your taxable income too. Unfortunately, the regs are not out yet on that, but those are some of the things that we want to continue to offer. I want to have Christy Saul, who's the other vice president of the Health Plan Options Department, talk a little bit about critical illness and accident plans and what you might want to do off-cycle with some of your clients. Talk to them about filling in those gaps, if you will, for individual coverage. We're also going to be talking a little bit about ERISA and some of the new threats, if you will, to small groups and the summary of plan documents that they're required to have. So, again, as we continue these, I want to not only talk about the individual FFM, which it was a necessary evil for all of us, but I want to really make these more strategic in coming up and helping you come up with ideas on new clients to touch and new opportunities for you. Okay, let's see here. I did have a couple questions, and Justin says, does URL offer short-term medical plans and limited medical plans? We absolutely do. And Justin says, please define a short-term medical plan, limited medical plan, and catastrophic health plan, and accident insurance plan. So the brief description as a short-term medical is simply that. It is an interim health policy with medical underwriting. There are gatekeeper questions, and you buy that coverage for a very specific amount of time. There is pre-existing. And each policy that you write, if it's a 3-month, 30-day, 6 months, 12 months, stands on its own. It's non-renewable. You'd have to rewrite, but it's an interim policy. Again, it doesn't meet the current guidelines and will not prevent your client from getting that individual mandate tax, but it is, again, some level of coverage. A limited medical plan is really a it's probably not the proper terminology, but it's basically a fee-for-service schedule. So network providers you can use. There's a network that you can use for reduced premium, but you get a set dollar amount for each specific service, such as a doctor visit, hospitalization, surgery. So it's an indemnity policy in that you're purchasing it for very specific coverage, and it doesn't exceed that coverage. For instance, if you go to a doctor's appointment and they may allow $30 or $50 to be reimbursed to you for a doctor's appointment. If your doctor charges $100, you'll get reimbursed $50. The rest is on you. So it's very limited medical plan, just like the name. Catastrophic health insurance plan, those are available on and off, and typically they're for those that are under 30, and they have very high out-of-pocket limits, the $6,350 for single, $12,700 for family, and they offer limited doctor services, several visits a year, but they are just that, for catastrophic purposes only. It will protect you from huge bills, but it won't, it is a huge deductible as well. And then accident insurance plans, those are very specific, again, to accidents. If you fall and break your leg, you get, a set dollar amount towards that injury, even if you have health insurance. And a lot of people are using that accident payment as, a cushion for their deductible, which they're still ultimately required to pay. So I hope that helps. Justin, if you want to talk a little bit about it offline, then just give me a call. Pardon me. That does appear to be all of the questions today. We finished at 10 o'clock, so I hope I didn't tie you up too long. Enjoy the beautiful weather today. Enjoy the rest of the week, and certainly enjoy your weekend. Bye-bye.